Will your portfolio persevere throughout the pound's pickpocketing? Hello and welcome to today's Daily Blitz. Now, a while back, Nikolai, you gave a prediction in a previous Daily Blitz in which you said that FTSE 100 investors may get pickpocketed by the pound due to the strength of the pound and relating to the currency risk within the FTSE 100. Now, as British investors normally look to the FTSE 100 and they see it as sort of a measure of the stock market stability, I think it's probably important that you go over what that risk was and how you've been proven correct by it.
Yeah, you'd think that FTSE 100 companies are British companies, but they're not. They earn most of their money overseas, about 75% of it. And that means they're exposed to UK exchange rate risk, pound exchange rate risk. And basically, as a result of a strong pound, their earnings go down.
So since that time, actually, it was about mid-October, as I recall, the FTSE 100 has really had not a very good time relative to other British companies that are actually based in Britain and are using the pound as their main currency. So if you have a chart, as I understand, which shows the FTSE 250 outperformance since that time.
Yeah, if you look at the chart, it goes back to about October, I think early October. You can see the FTSE 100 in blue, and that went up about 2.5%. The FTSE 250 in green, which rose 7.7%, a lot more. And then you've got the pound in red, up 7%, just like the FTSE 250. And what that's basically showing is that domestic companies based in the UK who earn their money in pounds are doing very well as a result of the strong pound, whereas companies that are very international and very large are not doing well.
And that would explain why a lot of news publications look to the FTSE 100 and they say, oh, things clearly can't be doing very well when the FTSE 100 is sort of meandering around, whereas in actuality, when you look to the domestic British economy, it seems to be looking pretty good. So how do you actually expect things to go forward from here? Because you were right with your previous prediction. What do you think comes next?
Well, it looks like election risks are receding and Brexit risks are receding, which should suggest a stronger pound, which means we'll see a continuation of this trend where the FTSE 250 British small stocks perform well, while FTSE 100, British big stocks, international companies, performs badly.
Well, that sums that up for today. Do make sure that you're more invested in the FTSE 250 rather than the FTSE 100, and don't pay attention to any of the headlines that just look at the 100 because they're only seeing half of the story. That's all for today. Thank you very much for watching, and be sure to tune in next time.